Welcome back, traders. So this video is for guys who are honing in into one strategy. Now I suggest you create a simple file. This is a Google slides, what's that word? It's a Google Slides site where you can just post in your daily reviews. And the best thing I love about this feature is it has all these slots where you can screenshot your process. So today is day 1 on Monday. It's the last day of the month, and of course there are plenty of opportunities that we will be looking for this coming week as the month begins. But as you can see, my process is simple. I'm just looking at what has the market done. We have day 1 on Monday. Asia sets the high and the low, the high of the week. It's the high of the day, low of the day, high of the week, low of the week. So it's this here. Asia sets the high and the low of the week. Alright? And then London pins the low of the day, about 25 pips, which is the typical stop hunt. So here it is. As the London session was closing, we had this pin to the low of the week, and then we had another push to the low with a break in structure retest, engulfment for the move up. So still the process is the same, but we are just looking at what has the market done before we even start looking at our window. Now keep in mind, I'm not trading on Monday. I'm just looking at what the market is doing so that I can be in flow with the market from the beginning. That way, when my setups begins to form, I know what I'm expecting from the market. And then after the reversal, the London pin, the market reverses at the end of the London session and breaks out of the high of the day. So as you can see, the market breaks out. Well, it does not really break out in the London session. It's in the gap time. The market breaks out. So I adjusted this line because I was looking at how the market behaved in the New York session. But the price did come back to the high of the day. Then there was a 1, 2, 3 push or a stop hunt for the continuation again. So for those who are looking to trade this session, you could have looked for an opportunity for the continuation or the reversal. Now, the New York first hour breaks out explosively, extending the high of the day and the high of the week. When I see this, high of the week is my really main point, because I only take trades at the high of the week. And there is a simple formula that I follow. If it does not give me that formula, I'm not ready to risk my money if I am not following my plan 100%. So the first hour breaks out explosively, extending the high of the day and the high of the week. And then the second hour comes back to the high in 3 pushes and breaks out again. So this is just a continuation setup, but to me, I call it. So this is a 1, 2, 3 stop hunt. And then there was no enough liquidity, so the price again stop hunted in again 1, 2, 3 push to the high for a reversal or a stop hunt. That is how I just think. So I'm not trying to predict the market. I am just looking at what is the price, how is the price behaving? How is the price behaving? Where is the money? And then of course we are still following our process. Then after this, the market breaks out in 3 pushes. That is in the second leg again, in the second hour. Then the reversal sets up at the high of the week. So actually today's setup gave me a perfect setup. It followed my process to the core, but I don't take trades on Monday. I let it build up so that I can have at least a setup that I am very confident scaling in and risking a a chunk of money that I have. So this is my process. The first hour sets the high of the day, which coincides with the high of the week. So let's use the trading view, and I'm going to explain this very simply as if you are 5 years old. So if you don't understand this setup, I don't really think trading is your style. So the first hour, please, if you have problems with trading view, this is where this is where this time zone here, when you click it, you can set it to New York. So I'm looking at this time at New York time. So between 8 and 9 New York time, I plot the first hour. So this black line represents the first hour. This is the high of the week, high of the day, high of the session. All right. I don't need to place the low of the week because I'm looking for sales. In fact, I've come to realize sales work better than buying. I don't know. Maybe I'll find out why later, but that is what I've observed so far. First hour creates our high and our low of the session. Now, that is just an observation. We are only looking to trade after the second hour. So in the second, or let me add this line so that you can see the boundaries. We stop trading at 11. So if we have a setup between 9 and 11, then that's a valid trade setup. And what is a valid trade setup? The price comes back again to the high. So it might come back to the high and pin it. It might come back to the high and break out. It doesn't matter. I want price to come back to the high of the week, high of the session, high of the day that was created in the first hour. So after that, the price again pumps up to the high, continues, and then we have this. It sets the new high of the day in one push, and then comes back again in another push, and then comes again in another push, a 1, 2, 3, to the high of the week, high of the day, high of the session. And then the market breaks down. So this is the break of structure. This line here represents the break of structure. So for those who don't really understand what the break of structure is, so we have price going up, then down, up, then down. Then it fails to break above, or it might break above, doesn't matter. What we are looking for is price to break down, break this region, then for the retest. So if you understand the candle setup, how a candle is formed, a single candle, then you can just spot a breaking structure in even one candle. So the price breaks down. This is a very nice breakdown structure with a retest in 1, 2, 3 pushes again to the high. And then this candle is showing this red candle here at 10:06 represents the engulfment, which is your entry. So if you can't, up to there, if you can't really trade, execute, I don't really know what your problem is. So we have our stop loss at around 25 pips, 25 to 30 pips. And then our target is a risk-reward ratio of 1:2. Now, once we have this, we also set up our partial take profits. So once we break this zone here, we close some positions. Then we have this zone here, we can close some positions. And then you can let another position, a runner, to reach full take profit. So that way you keep on going, you keep on taking money off the markets. It's that simple. So if you take one trade like this, it is equivalent to taking 5 trades per 5 trades 5 trades a week. I mean trading every day, because when you really hone down to a specific setup that you wait for, when that market presents, or when that setup presents, you are very confident in yourself that you can scale in. You can add in into your positions without really having to worry about whether it will come back to your stop loss. And if it does come back to your stop loss, it's an opportunity for you to learn how to actually make your strategy more effective. So that was setups for dummies. I explained it very, very well. So that is my daily review for the day today. So as you can see, I have my my observations, I have my process, I have the screenshots of what happened, and yeah, with that I know what exactly happened on Monday, and we do that on Tuesday, we do that on Wednesday, hopefully Wednesday and Thursday, right there, Wednesday and Thursday, we will have a very good 3-day setup reversal. Who knows? So hopefully hopefully someone understood something. Hopefully you got value from today's video. Please comment your questions. I might answer, I might not. We'll see how it goes. Anyway, I'm just joking. Ask me any questions. I will be very happy to answer. And don't send me questions of who the kid is screaming. Okay? Anyway, have a very beautiful night or day, and see you in the next video.